Julius Horseman here. It's the 11th of November 2022. I just wanted to make this video before I go away for the weekend. I just want to keep harping on Magna Mining. It is not often I see such an absurd risk reward. I mean, like I said in previous interviews, even though the sector is cheap overall, very, very cheap, extremely cheap. Most metals, metal juniors, gold, silver, nickel, copper, etc. There are still cases that are, in my opinion, like 1,000% better than others. Even though all cases or a lot of cases might be biased, especially from a sentiment swing standpoint. But like Magna Mining is, hands down, given especially the margin of safety, the risk of a permanent loss, let's say, is, in my opinion, so low because it is so advanced and de-risked. Because that is typically when I take a big position, the last big layup, I think that was Snowland Gold. That was not too long ago. That has worked out pretty well because we saw the vein densities, etc. So even though it was high risk, high reward on surface, it seemed to be a very low chance that the assets would come in subpar. And so far they released some spectacular holes. So that was more high risk actually, but still a no-brainer risk reward. Magna Mining is incredibly cheap. They don't need to find a single pound of nickel, copper, or PGMs for this to already be like one of the biggest deals I've seen in years. So one could say there's no risk on that department. They don't even need to find anything more. You're not taking exploration risk. They have two advanced past producing mines in Sudbury. They're pretty much fully permitted. So these could be monetized in the not too distant future. And they have a permit for a mill. They could toll mill because there's smelters, etc. and mills nearby. So whereas most companies, even though you think there's a theoretical value of a gold mine in wherever, that might not see any cash flow in 10 to 15 years. So you're really at the mercy, let's say, of the market. Especially if it's a trading sardine, it's a mature trading sardine. These guys, I mean, this could be a stock that is actually cash flowing in 12 to 18 months. And I've gone through a few toll milling scenarios, assuming lower nickel prices than now. And that would still make Magna Mining absurdly cheap. Even if they raise, let's say, 20, 30 million or whatever it would take to go into toll mill, and that later could finance both the exploration and the building of their own mill at Shakespeare, and then have a 2-mine operation. Organic growth, I mean, those are typically ones you could do really well in. It's like, just look at K92 for example. Started off with a small mine in Indonesia, ramped up production. I think that from bottom at least, I mean, it's worth over 1 billion now, well over 1,000% as the company has kept on growing and cash flow growing and exploration, etc. That is the kind of stuff I see in Magna. World-class management, they've done this before, and that became over $1 billion success. So there's, again, it's like time is the friend of the good management team. And K-Report just interviewed Jason Jessup, the CEO, who owns, I think, over 10 million shares. That is substantial skin in the game. And this guy is a mining engineer and was in FNX Mining and had senior manager roles there. He worked for Inco, then FNX, then maybe Quadra FNX, and then he started up Magna Mining to do FNX Mining 2.0. So there's like, you couldn't ask for better people, and he's brought on a bunch of FNX Mining guys. These guys have actually done, they put 3 mines I think into production in just a few years, in around 2003 to 2006. They did that in a very short time frame, successfully. Got bought for over $1 billion. And yeah, I just highlighted some stuff here. Shakespeare is typically forgotten. As soon as you have 2 assets, now the Denison project is like the flagship project. So typically the other one gets discounted. But Shakespeare has a capex of 233. I don't remember what the NPV is right now at these nickel prices, but Shakespeare has only a 7-year mine life, and they think they could extend that. They actually think that they might be onto the feeder zone to the mineralization at Shakespeare. So there's exploration potential. They're probably going to add mine life, so that's going to jack up the net present value. And then when you combine that with the Denison project, then you have a plant that could blend, and again you could have 2 mines going into 1 mill, and you can blend the ore, etc. So you could capture both of these because from 1 mill. So basically 2 mines, 1 processing plant. And like they highlight later on, cash flow from toll milling to fund capex and exploration, additional mine life, support for future throughput expansion. Sorry, I mean, they basically laid out the roadmap, what they're gonna try to do. Yeah, I mean, in the interview you touched on the toll milling option, which could make Magna self-funded. This is, I think, important because I mean, you know how the retail market is. It's like right now, Mitsui, I think this was a year ago or so, put an implied value on 100% of the Shakespeare deposit alone, not the Shakespeare project, the deposit alone at 64 to 100 million. Right now, the enterprise value of Magna is 76 minus 9, 67 million. This is coming from a multi-billion conglomerate, saying that Magna right now is probably either fair value or cheap, just based on the Shakespeare project. And the Denison project looks better than the Shakespeare project. So this is, again, it's like one of the absolute biggest no-brainers I've ever seen. Because I'm not smarter than Mitsui, and I'm not smarter than the guys running this company. They know what they're doing. That's why they were able to raise 20 million not too long ago for the Denison acquisition. I mean, this is, I mean, I get pissed off just looking at this market cap. I mean, I bought a ton of shares. So I mean, that comes with the territories. Like, there's no way you're going to make big money if you don't find big opportunities. And when you find them, you should take advantage. I'm not in for a penny or something. I mean, this is, in my opinion, one of the most absurd mispriced juniors out there, because there is not, I think, a single junior in the whole of North America that has 2 super advanced projects, permit to build a mill, and could be in, actually monetizing these assets in 12 to 18 months. Plus, as he says in the interview, also points out that almost no junior investor has seen the type of drill intercepts that can come out of Sudbury type deposit in years, and could be another shock in addition to the shocker maiden resource estimate. Because the Denison project blew, again, that's 30 million ton of higher grade stuff than Shakespeare. And we're valued at either fair value or less on Shakespeare alone. This is for free. All the exploration potential here also is for free, and this is better than that. And as it touched on, drilling assays. Unfortunately, I don't have, well, I can actually, I have listed. These are some of the highlight style holes you can see in a Sudbury type deposit. I've recalculated this to meters and AU equivalent to make it easier, because I mean, I can't appreciate this in my head, at any time, so I have to convert it. Look at some of these numbers. Again, no junior has drilled these kind of deposits, I think, for many years, perhaps since Magna Mining actually in 2006. And I looked at a junior nickel company yesterday. They had a market cap of 20 million. They're located in Quebec. I mean, it looks like kind of a good project. They have some historic holes. I mean, not anywhere near a resource, I think. They have some one historic hole or something that looks pretty good. They actually drilled a hole and they quote acid it with an XRF gun. And one of those holes looks really, really good. But that's an XRF gun. Those are not assays. And when you think about it, they're at 20 million. They have some cash though. But it's like, imagine how much money, and how lucky they would need to be to get to Magna Mining stage. They don't even have a resource, let alone any permits, let alone one resource, let alone two resources, let alone infrastructure, being close to mills and smelters, and being the heart of the Sudbury camp. So it's like, all examples I look at just highlights the fact how absurdly cheap this company is. And I only need one of these per year, really, to make a big, Snowline alone, pretty much, since I went, really heavy into that. It's off, I think it's actually off like 40% or something from the top. But, that's still up from where I plowed in heavy, because I thought, okay, that's going to run. This is different, because this, you don't even take any, risk at face value, because it's already there. This is already here. So you're stealing confirmed success. We're not taking risk. We're not betting on any exploration assays or something like that to create value. So we actually own something that just became cheaper. Now this is absurdly cheap right now. And I would really recommend listening to this interview. There's a bunch of stuff. I don't know. He also mentions that the Denison Green Hill mine was described as the one mine that FNX wanted to acquire but couldn't back in the day by Gord Morrison. And Gord Morrison has a deposit named after him. He was with FNX Mining and now he's an advisor to Magna. So he's super bullish on the exploration potential at Denison, which again, we're not even paying for the 30 million tons that are already there. Again, they believe they've gotten a better handle on the Shakespeare mineralization and that they might be onto a feeder system. It's like a fellow bull just made remarks. This is so tightly held that as soon as it churns a couple of million shares, I bet there will literally be no sellers. Look at the new cap table. I almost guarantee no one there is selling. No one there is selling, plus there's a 4-month lockup on a deal stock. So all the stock churn is coming from less than 35% of the float. Also, the way this market is, I've heard about some institutions selling whatever is liquid or other, what they want to do. So no doubt some profit taking or investing reducing small cap exposure. It's like, for the life of me, it's like, unless you have a very, very good reason for selling to meet redemptions, or you have way too big of a position, I'm talking way, way too big of a position right now. I can't even fathom who's actually parting with their ownership of Magna. This might be, again, it's like the worst sales I've seen anyone do in years. And nickel price, that's up since the deal announcement. And again, this is not some, because I often talk about, okay, silver, paper, silver, and gold prices. Why everybody's looking at that if you're in an alpha stock exploration play, because they won't monetize, they won't actually be producing any gold or silver for like probably at least 10 to 15 years. So what the price of gold or silver is doing today makes no difference on the economics or value of the project. What the gold and silver prices in 10, 15 years will dictate that. In the case of Magna, which could be toll milling within, let's say, 12 to 18 months. This is a really good tailwind to see what appears to be nickel price having potentially bottomed and breaking out. Because my toll milling scenarios had a nickel price assumption of 10 Canadian dollars per ounce. I think today it's probably closer to 50% higher. I think they would could make a lot of cash in the not too distant future from toll milling alone. And these are just some catalysts, let's say, because I mean the hardest part now is like, again, I get triggered just looking at this valuation, because I'm sitting there like, how in the hell is nobody seeing this? I pretty much plowed in everything I can without going, I don't know, all in, let's say. I have a very big stake now in Magna Mining, and I couldn't believe, and like I said, I think in the video I did a few days ago, it's like I just sat there and thought like, hey, anything below 50 cents here, or up to 50 cents, might be the best buy of any juniors in the space that I am aware of, from a risk-reward perspective. Because on paper there's absolutely no downside. On paper there's like probable 200% upside, and if they do what they did with FNX Mining, or even come close to that, who knows, 10-bagger with time. And they Jason even mentioned that with their strong backing, etc., it allows them also to look at further acquisitions. I mean, they really want to build the next, let's say, I don't know, mid-tier nickel junior. And I don't think there's a single junior in the nickel space in North America that even comes close to the risk reward in Magna, and especially not comes close from a margin of safety point. Most might, there's some who have, big low-grade deposits, not permitted, capex might be 1 billion, can't toll mill, etc., etc., don't have the permits. They're like miles beyond Magna. Again, I don't think it's even close. I don't think any nickel PGM play comes even close to Magna. I don't even think most gold and silver juniors right now comes close to Magna. And I'm not even a nickel PGM guy typically. But when you see a risk reward, like a case like this, I would be stupid not to take advantage of it. And I have. So it's like, I am biased. Believe me, I am biased. They're a sponsor. I have a big position, very big position right now in Magna. And it's like, I can't even sell. So I mean, that's why it's like, this is at least medium to long-term play. Because there's no way I could flip this. Because this stock is so tight. And right now, yes, it appears we're churning through sellers for technical reasons. I mean, Jesus, it's like, this is why, I mean, what I kind of like is like, if you're a value investor, etc., you see some dudes like, hey, I'm probably gonna get out. So it's like, I mean, there's accumulation going on, obviously, because there's a buyer for every seller. But it's like, yeah, what happens when this goes? It's like, you know, that poster, or a fellow long said, it's like, when we get rid of the, in my opinion, incredibly dumb money that is selling right now, I don't think anybody's gonna want to sell down here. You have to either be a forced seller or be, in my opinion, incredibly stupid to sell a case like Magna Mining. Yeah, one of the absolute best risk rewards I've seen in years. I already liked it before Denison. This just made it, I don't know, 400% better. So my fair value range for Magna, going off the Mitsui MOU, etc., I think it's up here somewhere. I think anything below, at least is like, I don't know, at least $1 is like, because that would have the market cap at 150 million or something. That's not even expensive. They have a bigger resource than Talon Metals right now. Talon is at 400 million or something. Yes, they have the exploration upside, but they are years away from having anything into production, if ever. Because they already have, I think, problems with the locals. Magna does not seem to have any real problems with the locals. And again, they're close. Sudbury is like a mining area. So I can't see I can't see even an orange flag that would make Magna expensive right now. But I don't see any red flags either. And I think, again, that's, I guess, what you should expect when you have this kind of high caliber team and you already have a multi-billion corporation saying, hey, we like what you have. Please let us support you. And you have people like David Elliott of Haywood, who has taken, I think, a personal stake, pretty large one in the company. And you have Dundee, and you have that fund, what was it called, Hawks Capital or something, who apparently, that's like, I wouldn't say, that's apparently like a private investing arm of some other fund. So there's like, that's like personal money as well. And Jason said in the interview, these guys might do 1-2 deals per year. Yeah, and that fits with what I think is like, this is remarkable. This is like, in my opinion, like once in a decade type layup. Maybe 2-3 times in a decade. But again, I don't think I see a better risk reward than this, because you have such an extreme high probability of let's say in my opinion 2-3 bagger, and you have 10 bagger potential. I know a lot of stocks that have 2-3 bagger potential and quite high, but not as high as this. And still you have that. I mean, if you have a mature play that's undervalued, that still has a cap. These guys could grow. They're about to start, or if they have already perhaps, a near surface drilling at Green Hill. PE study to be initiated, incorporating both projects and looking at, possible scenarios. Exploration drilling at Green Hill, beyond near surface, trying to get that high-grade footwall stuff. I mean, those when they hit that at FNX Mining, those were some obscene grades, like bonanza grades over long widths. Drill results, obviously, testing feeder at Shakespeare, perhaps. The PEA study completed, expected late Q1, I think, next year. I think that's going to show easily over 500 million. I think, who knows, maybe up to, maybe, if they don't increase the size of the plant, I don't think they will get over 1 billion. But it's like 500 million, I think that's easy. Toll milling development, again, because Jason talks about doing PFS study work on the footwall mineralization, and they might, start mining to see, okay, get a handle on the metallurgy there. because that I don't think has been mined yet previously. But Lonmin had indicative metallurgical results, etc. And then, of course, increased resources at Shakespeare and Green Hill. I mean, I think Shakespeare alone, if they only had Shakespeare, Mitsui says it's worth more than this on balance, and that could grow as well. Yeah, I just want it's like I'm going nuts here. Just looking at this, it's like I can't believe what just happened with the Maiden Resource, and I get triggered by seeing that. It's like, there's actually people selling at 52 cents. 2, there's obviously not yet enough buyers to really plow through that. Sure, there might be accumulation going on. So I mean, hey, I mean, again, if you can buy this at this level, then up here, yeah, of course that's better. So it's like, yeah, I can understand it. If you want a big position, you're in no rush to plow through the sellers here or technical traders or whatever. So that makes sense. But I think when this goes, it's like, yeah, look out above. Yeah, so that's again, consider me biased. It's just that I really, it's like, as always, I don't share your losses or your profits. If you don't see a case, etc., do not invest. But it's like, I think I would be doing a real disservice if I didn't really pound the table on this one. Because, I think this is pretty much as good as it gets for a risk reward with a margin of safety. So, yeah, and I put pretty much everyone I know into this stock. And I think that over the next 6 to 12 months, I would expect to be up 100, 200% or something. And could, alone perhaps materially affect the portfolio returns. Thanks for listening. Again, not investing advice. Bye.